break down below the 50-day EMA, we could really start to fall apart and may find ourselves closer to the $3,500 level. Silver, of course, has exploded to the upside, but having said that, I see a lot of noise between here and $50. A volatile session on Thursday. This is Chris Lewis from Hola Prime, taking a look at your technical roundup for Thursday, October 30th. The first market, of course, is gold, and that's the one that everybody wants to know about. My email box is full of people coming to find out where to press buttons. But the reality is we've seen a nice rally higher. It is a good sign. The question then becomes, will we continue to go to the upside? The 4150 level, I think, is an area that could be the next major barrier. We are sitting right there at resistance, so it'll be interesting to see how this plays out. I still think there's a good chance gold may have peaked, at least for the time being. Quite often you'll see a large spike like we have over the last couple of weeks, a pullback, and then another bounce that fails. That's what I'm watching out for. Ultimately, it's really not until you get above 4,200 that you can be somewhat comfortable. I think you have to be very cautious with your position sizing right now, but all things being equal, if we do break down below the 50-day EMA, we could really start to fall apart and may find ourselves closer to the $3,500 level. Silver, of course, has exploded to the upside. But having said that, I see a lot of noise between here and $50, and signs of exhaustion could kick off fresh selling. If we can get a daily close above $50, then it will be a very bullish sign. But keep in mind, again, we got straight up in the air pretty quickly, and now you have to ask the question of whether or not we can continue the overall momentum. If we turn around and break down below the 50-day EMA, which would be quite a feat, at least anytime quickly, due to the volatile and explosive move to the upside on Thursday, then the market really starts to fall significantly, maybe all the way down to the $40 level. Looking at the size of the candlestick, that is pretty impressive, but really, again, maybe what we've got is sideways action. That actually is better than some type of impulsive move to the upside, because at least it shows that we are starting to stabilize a bit, work off some of the froth, and really I think that's the most important thing that you're looking to do. The euro initially rallied a bit against the US dollar, but by the end of the session, we've seen a lot of back and forth, and that does make a certain amount of sense, considering that we had the European Central Bank had an interest rate decision and decided to hold steady. But you'll notice that the euro did fall, and now it looks like the 1.1540 level is an area that offers support, perhaps sending the market down to the 1.14 level. The 1.14 level is also where we see the 200-day EMA hanging around. Short-term rallies, I believe, end up being selling opportunities with the 50-day EMA right out the 1.1650 level offers a barrier. And then after that, 1.17. I still believe the US dollar is going to continue to be stronger than the euro, and we are going to continue to just fade and drop. The British pound initially tried to rally during the trading session, but found far too much in the way of resistance above the 1.32 level, then turned around to show signs of negativity. All things being equal, we have faced a fresh new low, and now it looks like the market is probably going to continue to see downward pressure to the 1.30 level. Short-term rallies at this point in time, I think, continues to see a bit of a fade the rally type of noise. The 200-day EMA, I think, will continue to be a bit of a ceiling if we were to break above the 200-day EMA near the 1.1 or 1.33 level, opens up the possibility of maybe a deeper correction. But really, this looks like a pair that's about to fall apart, and the US dollar strengthening right along with the British pound uh, continues to suffer overall. I think this is a market that will continue to be one that you're looking for selling opportunities. The US dollar continues to strengthen a bit during the trading session here on Thursday to break above the 0.80 level. If we can break above the 0.81 level, then I think you've got a situation where the US dollar probably continues to go higher. This is a pair that's been in the middle of a bit of a consolidation area and perhaps even a bit of a floor. The 0.79 level is an area that I think offers a floor. And breaking back to below that level would, of course, be very negative. I don't see that happening anytime soon. But really, at this point in time, I think you've got a situation where we probably chop back and forth. Both of these are considered to be safety currencies. But it's been since basically the beginning of July that we have seen just back and forth in about a 200-point range. And with that being said, I think you've got a situation where you'll be looking for certain amounts of value on each dip. The question at this point is, can we finally break out to the upside? I think it takes some type of external factor, but right now you do get paid to basically hang on to the market is going to do. So with that being said, I like the idea of hanging on to the interest rate differential, getting paid at the end of every day. And therefore, you're looking at this through the prism of a market that really isn't going anywhere. So you just get paid to be there. The US dollar has rallied significantly during the trading session on Thursday as the market has broken above the 153 yen level. And of course, we had the Bank of Japan release its interest rate decision and press conference known. And now it looks like short-term pullbacks will more likely than not end up being a buying opportunity, especially near the 153 yen level. A drop below there opens up the possibility of a move to the 151 yen level. But really, at this point, I think you've got a situation where traders are looking at this and hanging on to it for the longer term move and to get paid at the end of every day, as we have seen the interest rate differential continue to be quite generous. As long as that is going to be the case, then I have no interest whatsoever in trying to shift. And I think ultimately this is a market that we eventually do go much higher, but you will have to be a little bit cautious. The US dollar broke above the 1.40 level against the Canadian dollar, but it does look like we are sitting right around the 1.40 level to figure out where we are going next. If we can break above the 1.41 level, then the 1.4250 level could be your next target. All things being equal, short-term pullbacks, I think, are buying opportunities. And the 50-day EMA continues to be significant support right along with the 200-day EMA, which is at the bottom of the hammer from the Wednesday session. All things being equal, your mother move here is pretty strong. And now this little pullback is just a move to the upside waiting to happen, as we have seen quite a bit of noise. I think eventually the overall interest rate differential is going to continue to push this pair higher as well. Keep in mind, we are in the mother of all battles here as far as tariffs are concerned. And with that, I think the US dollar eventually comes out on top, mainly because I think Canada is in that bad of a spot. Yes, the Canadians cut interest rates and the Americans did as well, but the Americans also said that might be it. So basically, at the end of this week, we are basically where we were to begin with as far as interest rates are concerned between the two countries, and therefore we find ourselves within a few pips of the opening price. The Australian dollar initially rallied during the trading session and gave back the gains only to show signs of weakness. The 0.6550 level is an area that's been important more than once. And as we are hanging around the 50-day EMA, I think this is worth noting that most traders are just hanging around trying to figure out where to go next. These movements that we've seen in this pair have been very somewhat, I don't know, just lost. It really didn't have much in the way as one would think of as volatility. So, with this, I have pretty much a neutral outlook on this pair, maybe favoring the downside slightly. All things being equal, this is a market that I think if we do break down the 0.6450 level is support, and then the 0.64 level. Rallies at this point to the 0.66 level and then 0.67 both offer a bit of a ceiling. I like the idea of fading short-term rallies, and that's pretty much how it's been for a while. The Kiwi dollar initially did rally a bit during the trading session, only to turn around and show weakness. We are below the 0.5750 level, which is an area that's been a bit of a magnet for price. At this point, the market is likely to continue to drop down to the 0.57 level. Short-term rallies, I believe, offer selling opportunities at the first signs of exhaustion. The 50-day EMA is closer to the 0.5810 level and dropping. All things being equal, this is a market that is going to favor the US dollar, mainly due to the fact that the greenback itself is strong. Kiwi dollar, of course, has to deal with Asia and all things China related, which is a bit of a mess at the moment, and therefore just simple momentum, I think, continues to drive this peg down. It certainly continues to struggle. It's just been a miserable place to be. I guess you could take a measured move of the consolidation and drop, and from a couple of months ago, it does suggest that we go back down to the 0.5550 level. I really don't see that being that much of a shock. The euro continues to rally against the British pound, but it is giving back some of the gains, and short-term pullbacks, I think, open up the possibility of a move to the 0.8750 level, which was the top of the overall range that we had been in previously. By breaking above there, you take the measured move between 0.86 and 0.8750, the 150-point range, and the breakout opens up the possibility of a move to the 0.89 level. The 50-day EMA is close to the 0.87 level and is rising. I think that ends up being a significant support level. And short-term pullbacks at this point in time, I think, will continue to attract a lot of inflows. The shape of the candlestick for both Wednesday and Thursday end up being a bit of a shooting star. And with that, I think you've got a scenario where a lot of people are going to be looking at this through the prism of trying to find value. The British pound has been pretty beaten down, and with that being the case, I think we have a situation where volatility continues to be a major driver. And with that, I think you also have to be cautious and look at these dips as an opportunity to get long. The euro initially fell during the trading session on Thursday against the Swiss franc, but only turned around to show signs of strength again. The 0.93 level is offering resistance above, and I think extends to the 50-day EMA. So with that being said, the market will continue to be very noisy, and I think could open up the possibility of fading the rally type of behavior. The market continues to be very volatile and very choppy. And with that being said, keep in mind that the interest rate differential favors the euro, but the risk appetite type of scenario comes into play as well because, of course, the euro rallies in good times and the Swiss franc rallies in bad. This is a situation that I watch very closely because it gives you an idea of what the Swiss franc is doing and what it's probably going to do against other currencies. This is the first place the Swiss National Bank watches due to the fact that the overall look of the Swiss franc is highly influenced by risk appetite. And keep in mind that the Swiss National Bank is very cautious with what it lets the Swiss franc do because, quite frankly, 85% of their exports end up in the EU. So while you'll see other pairs, for example, like the pound Swiss fall, this is the one you really watch. This gives you an idea as to whether or not the Swiss National Bank gets involved and starts intervening. The euro has rallied quite nicely against the Japanese yen. I think that continues to be the case, and I like the idea of buying short-term pullbacks. All things being equal, this is a pair that should go looking to the 180 yen level next, but it is going to take a little bit of momentum. Going into Friday, it'll be interesting to see how this plays out because Thursday, of course, had the Bank of Japan noise and nonsense coming out with the interest rate situation being explored and noted. I think at this point in time, it's likely that this pair continues to just follow the overall momentum and the overall Japanese yen selling. The 50-day EMA is sitting right around the 175 yen level. And if we do break down below there, then maybe we have to rethink this whole thing. But really, at this point, I do believe this is a pair that will just continue to go to the upside. The British pound against the Swiss franc has gone back and forth during the trading session, and it does look like it's trying to find a little bit of a floor. If it does rally from here, the 1.0650 level is an area that could be resistance. The area between the 1.0650 level and the 1.06 level is an area that previously was significant support. So now the question is, will it behave as resistance due to market memory? It's possible, but one thing that could turn this market around is Swiss National Bank interference, but it won't be in this pair. It'll be in that Euro Swiss pair that I was just talking about. So if that thing gets out of control, then watch. The British pound, of course, has been selling off quite drastically, so it's not a huge surprise to see that it's all the way down here. I think fading rallies, with the exception of Swiss National Bank interference and intervening, I think is the way to go. The British pound rallied quite nicely against the Japanese yen during trading on Thursday, but it is still struggling to break out to the upside. I do think eventually the British pound goes looking to the upside and tries to go looking to the 205 yen level, as the 50-day EMA has offered significant support, and I think short-term pullbacks continue to be opportunities that traders are willing to take advantage of. Keep in mind the interest rate differential most certainly favors the British pound, and of course, the Japanese yen itself is very weak overall, as the Bank of Japan has reiterated its lackluster strength, because despite the fact that they are at least trying to signal that they're worried about inflation, this is more of that we're going to have to raise rates someday type of action that we've heard from Japan for years, and I just don't think that means anything has changed. And it's more or less, we'll believe it when we see it type of situation. We could be drifting between 200 and 205 yen in the foreseeable future, just working off some of the excess froth. The Canadian dollar did drop against the Swiss franc early in the session, but now the 50-day EMA and the downtrend line both come into the picture to offer a little bit of a barrier. I'm not sure if we break out here. I do think that we've got to really get some momentum going to be comfortable buying. Because quite frankly, if this trend does in fact change, then it's going to be something you've got plenty of time to get involved in. The 0.57 level was important a couple of times, so if we break down below there, it's likely that we go looking to the 0.56 level. The market continues to see a lot of volatility, but really at this point in time, this is more of a Swiss franc story, I believe, than a Canadian dollar one, as quite frankly, the Canadian dollar is still struggling in general. The Canadian dollar has broken above the 110 yen level, but again, this is a yen-related situation. This has nothing to do with Canada. Quite frankly, nobody really wants to put money into the Canadian dollar at the moment with a huge amount of money. So ultimately, I think you've got a situation where the market is getting ready to make a huge breakout, and above 110.5 yen, then it's likely that we go looking to the 112 yen level. Short-term pullbacks, I think, open up the possibility of a buying opportunity near the 109.5 yen level and then possibly 109 yen. I've got no interest whatsoever in trying to short this pair. I don't want to own the Japanese yen against anything, despite the fact that really I don't want to own the Canadian dollar. But if I had to take a trade here, it would most certainly be to the upside. The euro has gone back and forth against the Norwegian krone, and I think ultimately at this point in time, being just below the 50-day EMA suggests that we are going to continue to see a lot of back and forth trading. Keep in mind that the 11.55 level underneath is going to offer support in what has been a very quiet and choppy trading situation. Quite frankly, I just don't see any reason to get aggressive in one direction or the other. And with that being the case, I'm pretty neutral on this. But if you're a shorter term trader, you might find this as a great place to trade back and forth for a handful of pips. The euro against the Swedish krona is slightly positive, but we did give back quite a bit of the gains. Short-term rallies reaching to the 10.95 level continue to see plenty of sellers. And with that being the case, we are just kind of hanging around just above the 10.88 level. Ultimately, this is a market that I think will continue to be very noisy. So with that being said, I think a lot of volatility will end up being the main story here. But if we break down below the lows of last week, I think it opens up the possibility of a move down to the 10.75 level. If we can break above the 10.95 level, then we could see the euro travel all the way up to the 11.08 krona level. The New Zealand dollar has rallied pretty significantly during the trading session here on Thursday as well, and found itself getting very close to the 89 yen level. The market rallied pretty significantly and gave back about half the gains. By doing so, it looks like the market is just kind of hanging around in a 100 pip range, with the 88 yen level on the bottom being support. If we break down below that level significantly, then it's likely that the market goes down to the 200-day EMA. If we turn around and break above these 89 yen level, then the New Zealand dollar really starts to take off to the upside. This is a market that I think continues to see a lot of sideways to upwards action, mainly due to the Japanese yen and really not a whole lot to do with the New Zealand dollar itself. Again, this is a situation where I just do not want to own the yen, and therefore I would be bullish here, even though this is not really the first place I'd be looking to short the yen. The New Zealand dollar did try to rally against the Swiss franc, but you can see it gave back a bit of the gains, and we ended up forming a bit of a shooting star. We're hanging around the 0.46 level, and that to me suggests that we are probably going to start selling off. The 50-day EMA sits just above and right along the 50-day, or excuse me, the downtrend line. So I think this is a situation where traders will be looking to give up and signs of exhaustion and look to push this market down to the 0.4550 level. All things being equal, this is a market that I don't have any interest in buying until we get above the 0.47 level, and it's going to take quite a while to make that happen. The dollar has rallied pretty nicely against the Mexican peso, but it gave back a lot of those gains as well. I think we'll get the real signal at the end of the day on Friday. If we break down below the bottom of the candlestick for the Thursday session, then we could drop towards the 18.20 level. A rally to break above the 18.65 level opens up the possibility of a bigger move, perhaps to the 18.85 level. Oil continues to just hang around. It really doesn't have anywhere to be as we are dancing around the $60 level. This is a market that is sitting right here at resistance after that massive move due to the sanctions announced on Russia. We've heard about sanctions, we've seen about sanctions for years, and at the end of the day, the Russians will find a way to put oil on the market, and there you go. So I think you've got a situation where if we break down below the $59.60 level, then we probably drop towards the $56 level. The Nasdaq 100 had a tough day, initially rallying a bit and then plunging, but it has found a little bit of support at the top of the channel that it had just broken out of. This is classic textbook technical analysis, and now the question is, can we find buyers to come in and push this market to the upside? I suspect we will, given enough time, but all things being equal, this is a market that I'm looking for a bounce to get involved in. The S&P 500 rallied a bit during the early part of the trading session on Thursday, only to roll over again. We may have to fall in order to fill the gap, but eventually it's probably only a matter of time before we see market participants jump in to show signs of life. The 6,700 level is a large, round, psychologically significant figure that I think is a floor. The Dow Jones 30 has initially gone higher, only to turn around and form a shooting star for the third day in a row. This to me screams pullback. 47,000 should be a potential support level. If we break down below there, then the 50-day EMA could get targeted. A break above the 3 shooting stars would be extraordinarily bullish. Clearing the 48,100 level opens up a bigger move. So Bitcoin looks very much like market that is falling apart, and I think if we can break down below the 105 yen or $105,000 level, then it's possible that we could open up down to the 100,000 level. Short-term rallies could be short-term buying opportunities. Keep in mind that the 115,000 level is an area that could be resistant. Bitcoin, of course, is going to continue to struggle with overall risk appetite as things have been very poor out there. And as long as that's going to be the case, then I just don't see how Bitcoin takes off. All things being equal, the markets are probably due for a little bit of risk destruction. I don't necessarily think it's some type of massive sell-off. I think it has more to do with the fact that we just got a little over exuberant. Metals are probably a place that are going to cause chaos soon. The market bouncing probably gives us shorting opportunity in precious metals, but we'll just have to see how they behave. Oil, of course, looks like it's going to start drifting lower. The US dollar continues to strengthen overall, and those indices, I think they are buying opportunities on dips. We may need a day or two of negativity to really get involved at this point, as they are a little stretched right along with everything else. Volatility is the word of the day, so make sure that you keep your position size reasonable, as you could find a lot of trouble if you're not very careful.
Hola Prime, trade with transparency.